Looking to boost your own portfolio by following the insider trades? Our MarketBeat analyst Gabriel Osorio-Mazzilli has a list of 3 companies making some aggressive buybacks right now. Gabriel, let's start out today with just what are stock buybacks?
Yeah, so stock buybacks are when a company's management takes the company's free cash flow or part of the cash available on hand to buy back its own stock. What it is essentially is the insider's bet is that they expect it to go even higher in the coming months. So compared to other ways of profiting in the stock market like buying low, sell high, or dividend income, through stock buybacks, the company doesn't take money out of the company and it doesn't force investors to sell out in order to see the profit. So stock buybacks are a way, passive at that, for investors to increase their ownership in a company, increase the benefits they'll see when the company compounds on valuation without having to outlay any out-of-pocket cash themselves.
And that is one of the reasons so many investors do like to follow where these inside buys are happening. So let's get right to your list of 3 companies that are really undergoing some aggressive buybacks right now.
So first in the list is Barrick Gold, and needless to say, gold has been on a tear for the past 18 months to 24 months due to inflation pressures, geopolitical pressures, and other aspects that are driving the commodities price higher, which is why Barrick Gold's management has approved a $1 billion buyback program, which represents up to 3.2% of the company's market capitalization. Now, why is that important? When companies or management, in this case, decide to buy back so much of the company's size, that's usually a bullish bet, since they could take this money and pay themselves a bonus, pay a dividend, and do other stuff such as reinvest in the company's growth. But right now, the opportunity in Barrick Gold seems so obvious to insiders that they've decided to take this money and just reinvest it back into their own stock.
It's a good sign for investors in an industry, like you said, that's had a really bullish year, but there was a little bit of volatility right after the election. Has that volatility gone away?
Well, the election scenarios haven't really been priced into the market in the way that nobody really knows what's going to happen next. What one thing has to be kept in mind here for investors is inflation. We just had the readings last week. We just saw PPI. We just saw PMI data. Prices were the one segment that went higher in all of these. So whenever inflation goes up, oil, gold, and other commodities tend to do well in this case. So I can see why Barrick Gold's management decided to step in and buy back their stock as well now.
That is exactly why so many people like to follow what the insiders are buying. If you want to look at even more stocks that insiders are buying right now, check out our free premium report on the 12 stocks corporate insiders are buying. You can scan the QR code or click the link in the description of this video to get that free report on marketbeat.com right now. Barrick is our first company with some buybacks underway. What is your second company that's undergoing some aggressive buybacks right now?
Well, the second company is going to be Lyft, Uber's direct competitor. And when you talk about aggressive buybacks, this one is the most aggressive in today's list, since management is looking to buy up 9.3% of the company's market capitalization through a $500 million buyback program. Being this aggressive means two things, and we already covered them. Either the company is too cheap, or insiders believe that the valuation is going to go higher in the short term. Now, I believe it because of the same trends that Wall Street analysts must have seen as they expected double-digit upside from where the stock trades today.
So they're very bullish on their own company and their own industry. But what are some of the factors driving that confidence in Lyft?
Well, first of all, you can look at the company's financials with a 35% gross margin. That says two things about the ride-sharing industry. Lyft has enough pricing power to keep customers coming back to their platform and also enough market share. Might not be as big as Uber's, but is big enough to keep this high margin going. Now, let me tell you why this is important. As the company can keep up over 35% of each sale within the books, they can reinvest this money into further growth, stock buybacks, pay down their debts, and much more benefits to investors. And I think that's why management sees the price today and thinks, heck, this is a good buy today. Might as well put $500 million into it.
Your next stock pick is a little bit of a different industry and one that's been around for a very long time.
Yes, so the third pick today is Tractor Supply Company. And it's not the most exciting company, it's not the most exciting sector. It's manufacturing for farming and for agriculture, right? But there's one thing that excited me and might as well excite every other investor out there given the buybacks today. The company generates over 15% ROIC. ROIC stands for return on invested capital. And that's how much the company can compound its own investments over time. This is important because stock price performance over the years tends to match the annual ROIC. And as you know, the S&P 500's annual average return is of 8 to 6%. So, Tractor Supply Company delivering up to double the average S&P 500 return. I think that's worth buying even as it trades near this 52-week highs.
And like you said, it's not always that common for a company to do stock buybacks when their stock price is so high. What do you think is some of the motivating factors for this company?
Well, from the financials themselves, that big ROIC is one driver. The second could be the recent expansion in the manufacturing PMI index for the United States. But the most important, in my opinion, is the way that Wall Street analysts are forecasting earnings per share, or EPS, for the next year. And analysts expect it to go just under $2 per share in earnings, expecting $1.97. That's a significant jump from today's 44 cents earnings. And I think that could be the driver behind management confidence behind the buybacks today.
Yeah, and I think that insider management confidence gives investors some confidence in making a purchase in some of these companies.
Absolutely. If you see the insider activity, who knows the company's valuation better than the people that run it every single day and they know the ins and outs of the business? That's something that I rely on heavily when I look at a potential stock to buy or even look at, so I don't waste my time doing a deep dive for something that nobody else is looking to buy. Insider buying activity is always a good indicator of something going on inside that could benefit you as well.
Is there ever a downside to insider trading or a way to manipulate the stock price?
Well, the only downside that I actually look for is when companies buy back stock when it's expensive. Why? Because I think it's burning cash. It's just we have nothing else to do, we have nothing else to reinvest into. We don't really want to initiate a dividend because then we have to upkeep it. And we can't really pay ourselves a bonus because we haven't done much with the company. What is there to do? Either accumulate cash or buy back stock to keep the valuation going, to keep the performance going. So it's just like dividend payments. When dividend yields are high, but the company can't afford them, that's actually a trap. And the same trap exists with buybacks when the stock is way too expensive for its own good. Though in today's list, I think the upside potential is much higher than the downside. And I think that justifies a little bit of insider buying today.
All right, Gabriel, thank you so much for breaking down these stocks for us today. If you're interested in insider buying, check out another form of insider buying, and that's congressional buying. We recently posted a video all about congressional trading and why lawmakers tend to outperform the market so much, plus how you can follow every trade they make. You can find that link in the description of this video too. Thanks again for joining us today, everyone, and as always, happy investing.